Hey guys, and welcome back to the channel. Today we're gonna look at the market. I am not the absolute best, but we'll take a look. Um, gonna be. Hey guys, and welcome back to the Daily Dose of Finance, episode 13. Wanted to do kind of a market update, look at just a couple of companies. Um, yeah, so let's start with it. I got here the percent of stocks above 200-day average. This chart is kind of interesting because back in 2020, when the thing happened that we all know, it dipped all the way uh, down here in May for the bottom here. What was it? Like nothing was above, right? About, yeah, what is it? Like around 4? And the bottom now looks current bottom looks like 13, 14, which is really low. When we had the kind of bottom of the market in 22, it was about 15, so it's actually lower, which is interesting. Today, the S&P 500 got a pullback. We had that insane candle yesterday because we were so oversold. We're outside the Bollinger Bands. I'm using the 50 Bollinger Bands. So it was just natural for it to kind of, after the big pump yesterday, to get, a little bit rebound and a little bit back, but we're still happy. It tried to go outside. Well, as far as today, it tried to go outside again and didn't want that. It wanted to stay inside. I think for the Nasdaq yesterday, since I think it had the biggest single day move that it has had since like 2001, which is quite crazy. But yeah, so, and also the VIX as well it went up again because we got more volatility. To yesterday we had the crazy jump. Today we had the pullback a little bit. So, and also always it's a lot of good opportunities in the market to buy when we're over 30 on the VIX. Um, and looks like we're staying above for now. So it's going to be interesting if it could pull back and get back into line. Back in, what was this, 24 last year? It had a spike, but nothing crazy like we have now. So it's quite interesting. And then we have China. China still has tariffs. Yesterday, Trump paused all tariffs for 90 days. And he paused them, but they will still have 10% tariffs. So it's not completely gone. And but China still has tariffs and has now increased it even more. So the tariffs from the US on China is 125%, I believe. So they didn't do too much yesterday. All the other ones had like crazy jumps, right? The S&P and the Nasdaq and the Russell and that kind of stuff. But they still has this gap that I'm interested if they're gonna fill. If they get like if they remove the tariffs, something that like that maybe, or not to remove it, but maybe it gets a little bit nicer. So yeah, I think that's kind of the outlook for the market. Kind of that, like, we don't know, like it's so much uncertainty still. So yeah, I found out this great thing today. was that I found out that I could have Seeking Alpha on dark mode. This is now a blessing for me because it was blinding me all the time I had it open. So fantastic. For Lyft, for the people that don't know Lyft, it's the same as Uber. They have ride sharing, but it's mainly in the US and Canada. And like they're very small compared to Uber. Um, I think, let me see here, the market cap is currently, because they have more cash than they have debt. So the market cap of 4.74 billion, like the enterprise value comes down a little bit, so we get a little bit cheaper in that sense. But I believe that Uber is almost 10 times the size. Let's see. Um, let's see. No, it's way more. It's 30 times. Oh wow. And they don't have more cash than debt, about half or so, which makes them more expensive. If we're like, yeah, we had the video yesterday where we had Warren Buffett talk about not using estimates too much, but going more over their quarterly business reports. But we could use the earning estimates as like a little bit of a guidance. And we see here that the EPS has about, like, it has from 12, 30, 23%. So they will have great growth, and with this low PE as well, right? And also pretty decent gain in revenue as well. But I think this just means that Lyft gets a little bit of the market share of Uber. Of course, Uber is global. They have more, like they have Uber Eats and that kind of stuff. But I still think that this is a great company for a great price. And yeah, the forward PE is 10. They're making money. So it looks interesting if we can pull it up. Let's see, I got disconnected. Here we have Lyft. They had almost 5% pullback today, but if you look at like the monthly chart, they have they were very expensive at one point. But as we always say, the stock price will always reflect in the EPS. So if they're not earning enough money to keep the stock price, it will come down. It's always going to be volatile around the price, of course, what we think is overvalued, fair, and undervalued. But right now, on the monthly chart, this looks like it's beaten so badly down, and it's just consolidating at this point. So if we go for the daily on this, we are of course under the 1,000-day because it's so beaten down, and it kind of looks interesting. We got some pointers here where we had the indicators outside the Bollinger Bands. So we're very close here and oversold. So not that close, we were close. So I think that looks like a really, really nice buy. We have iQIYI. Let's just do two of these companies. iQIYI, which me and ValuePig love. Well, he loves it more than me. But I'm very happy that I got a little bit more of that stock the other day. They are kind of the Netflix of China, and they have like their own content and self-produced content as well. I think they're also doing what is it called again? Let's see here. They're doing like I they're doing like a park, like oh, what is it called again? A theme park kind of for their series, which might be really good. It's gonna be interesting. The interesting thing about them is that they have a lot of debt, but they have a lot of long-term investments. They have a decent amount of cash. Market cap is really tiny compared to being one of the leading streaming services in China. When it comes to their growth, their earning estimates, it's about 20+% a year over year on their EPS. They also don't have the best revenue this year, but it looks like they're gonna still grow in the years to come. So they have a lot of cash coming in. I believe revenue is pretty, yeah. So currently, well, the 12 trailing months, it was about 4 billion in revenue. That's $4.16 per share. And if we look for iQIYI here, it's currently $1.69. Of course, revenue isn't the cash they get, but they have an unlevered free cash flow of 2.5 billion, which is pretty crazy. So, you know, this looks really good. When we look at total cash per share, they have about $0.50 for each share. This gives us a little bit margin of safety and that kind of stuff. And they also have pretty decent tangible book value compared to now price, which we love buying good companies under tangible book. But yeah, I think that's enough for today. This is also, no, actually, let's look at this quick thing. We did the monthly for Lyft, right? This thing is also beaten down very heavily. It was at one point a stock that was $46. Now this is of course pumped after IPO and that kind of stuff. But kind of the same thing here. It's just kind of flat. And of course we got almost on the monthly a new, well, on the daily we got a new all-time low. And I bought because we got some great dips on it. And I had to average down even more on my position. But I think this also has great volume. Like it has a lot of volume. Like yesterday it had, what is it? Let me see, almost $100 million in volume for this small of a stock. The $100 million in volume, that's almost like it's 8 to almost 10% of, no, it's not 10%, but that like 7-8% of the complete stock value. That is crazy. Well, I'll end it at that. I hope you have a great day or evening wherever you are, and I'll see you tomorrow.